Hi there, this is Steve Miley, Market Chartist on behalf of ForexFraud.com, and we're now looking at the euro and the pound versus US dollar. Both in here just about retaining bullish themes on an intermediate term outlook, but the sell-off that we saw here in February generally primarily due to US dollar strength. The US dollar strengthening here after a perception of a more hawkish tone from the FOMC, higher inflationary pressures coming through with a more recent average earnings report in the US employment report, and also the move higher in US yields right across the yield curve. All of that helping the US dollar lower as we've seen this equity market sell-off, US dollar rallying because of a safe haven. So euro dollar lower in here, a real threat for a challenge to 121.59 for euro dollar, which would neutralize the intermediate term bullish theme and set a neutral tone, and even threat maybe towards 119.14, which would see a more bearish shift. We've already got a double top pattern in here, so real threat for a more negative shift and neutralizing that intermediate term bullish theme. Similar technical story in here for the pound versus the dollar cable spot FX rate. Market moving lower through from late January actually, but also through early February, primarily to do with US dollar strength, a little bit of pound weakness coming through as well. Even a more hawkish tone from the Bank of England back here this week on Thursday. Couldn't help the pound sustain any kind of recovery. So US dollar strength coming through again, pushing the market lower for the same reasons in here. A more hawkish potentially Fed in relation to higher interest rates, higher yields, higher inflationary pressures coming through, and a real threat for cable for 137.30 through here, neutralizes the intermediate term bullish theme, and should we surrender 134.56, we see a more bearish tone for the pound into February. This has been Steve Miley, Market Chartist for ForexFraud.com, and I wish you a great trading week.